All right, we are going to break down one of the biggest economic meltdowns in history. And you know how we're going to do it? By talking about monkeys and bananas and this really powerful, kind of dangerous idea called monkey logic.
I mean, it's a huge question, right? One minute it feels like everything is just booming, everything's going up, and then bam, the next minute it's like the floor just completely falls out from under you. So, how on earth does that happen? Okay, I know. It sounds a little strange, but you gotta trust me on this one. The simple little story about monkeys and bananas. It's genuinely one of the best ways to get your head around the psychology that drives these massive market bubbles and, well, the crashes that always seem to follow. So, let's set the scene. Our story kicks off in what seems like a perfect world. We're gonna call it the Great Banana Boom. Picture this. Everything is stable, everything is predictable, everybody's prosperous and happy.
Okay, so in this world, leaves are basically the money. The monkeys work, they earn their leaves, and then they use them to buy bananas. Simple, right? The price is totally fair, there are always enough bananas to go around, and life is good. This is our starting point, a perfect, balanced economy.
But then, you knew there was a but coming, right? A new, really powerful idea starts to spread. And at first, it seems absolutely brilliant. But deep inside, it's got the seeds of its own destruction. And yeah, you guessed it, we're calling it monkey logic. This is where everything starts to change. The monkeys start thinking, hey, why should I just settle for the bananas I can afford right now? And so they start borrowing leaves, that's our version of credit, right? To buy up extra bananas. Now here's the key part. They're not buying them to eat. Oh no, they're buying them because they're absolutely convinced the price is just going to keep going up and up and up. And this kicks off this crazy, powerful cycle. See, as more monkeys borrow leaves to buy bananas, the demand just skyrockets. And with all that demand, what happens? The price for one banana goes straight through the roof. And of course, that super high price just convinces even more monkeys to jump in, borrow more leaves, and push those prices even higher. You see the feedback loop? Just look at the effect this has. It's dramatic. Before all this monkey logic kicked in, the price was low, it was stable. Afterwards, it just explodes. And all of a sudden, a banana's value has nothing to do with how good it is to eat. It's based purely on one thing, the belief that someone else will be willing to pay even more for it tomorrow. But here's the thing about a market built on borrowed promises. It just can't last. It's a house of cards. This whole boom is heading straight for an inevitable and pretty painful bust. So what happens? Well, at some point, a few of the monkeys start to get a little nervous, you know? They look at this insane, sky-high price for a banana and think to themselves, wait a minute, this is crazy. A banana isn't actually worth this many leaves. And that's when they decide it's time to sell. And boom, that's when it all goes down. Panic just rips through the market like wildfire. Everyone, and I mean everyone, rushes to sell all at once. In just one single day, the banana market plummets a whopping 11%. The bubble has officially popped. Now, in market lingo, a bear is what we call a downturn, a time of falling prices and just general pessimism. So for our poor monkeys, the arrival of the bear means one thing. The party is over. The value of all those bananas they bought, it's collapsing. But the leaves they borrowed to buy them, oh, that debt is still very, very real. Okay, so why this whole story? Why are we talking about monkeys and bananas? Because, as you've probably guessed, this isn't really a story about monkeys. It's a story about us. This is, in fact, the story of the 1929 stock market crash. Let's map it out so it's super clear. The monkeys, well, they represent the American public, all the regular investors. The leaves they were borrowing, that's money and credit, which was suddenly really easy to get. And the bananas, what were they buying? Stocks and other assets. Which means the Great Banana Boom was actually that incredible decade of explosive growth we now call the Roaring '20s. This timeline right here shows you just how perfectly our monkey story played out in the real world. You know, after World War I, there was this huge wave of prosperity. By the middle of the '20s, ordinary people were borrowing money like crazy. They called it buying on margin, to speculate on stocks. By '29, the market hit an all-time high, but it was totally disconnected from what the companies were actually worth. And then, in October, the bear finally came knocking on Wall Street's door.
So when you boil it all down, this monkey logic wasn't just some made-up story. It was the actual real-world behavior of people borrowing way too much money to speculate on assets they couldn't really afford. It was this powerful, contagious belief that prices would just rise forever. And that belief drove the boom of the 20s, and it led directly to the bust of the Great Depression.
Look, this isn't just some dusty old history lesson. The story of the monkeys is so much more than that. It's a timeless warning about human psychology, about our behavior, and about the fundamental nature of markets. I think this quote really nails it. A market crash is when the borrowed leaves come due and there are no more bananas to sell. It's that awful moment of reckoning, right? The moment when all your debts have to be repaid, but the things you bought with that money, they're suddenly worthless. All that imagined future value just vanishes into thin air, and all you're left with is the cold, hard debt. So, that leaves us with a question. The next time you see a market just soaring, looking like it can't be stopped, maybe take a second and ask yourself, is this boom built on real bananas? On actual, tangible value? Or is it just being propped up by a giant mountain of borrowed leaves? Because honestly, the answer to that one question, well, it changes everything.